The collapse of crypto-friendly Silvergate and Signature Bank have left the crypto industry searching frantically to find anyone willing to work with them. In October, Citibank locked out trading platform Swan Bitcoin from its corporate bank account without warning or explanation. The only confirmation of what happened was in the form of a paper check of their account balance, which was delivered to the CEO's house. There was absolutely no notice, no phone call, no mail, nothing. Swan luckily had a second bank account and they could still make payroll, but for a smaller company in the same situation, it could have been a huge threat. And now we're in a position where the crypto industry needs banking, and it really needs it badly. Without banking partners, crypto companies cannot accept dollars deposits in return for services in exchange for tokens, nor they can pay their employees or vendors. That means the quest to build a parallel financial system free of intermediaries is dependent inconveniently on banks. Wall Street has often been reluctant to work with crypto companies, so many in the industry came to rely on just two US banks, Silvergate and Signature, which made them invaluable to crypto clients by offering real-time payments outside of traditional banking hours. Over the past week, both banks have closed, Silvergate because of overexposure to the ailing crypto sector, and Signature due to a liquidity crisis triggered by a sudden flood of withdrawals. That has left many crypto businesses, particularly the smaller ones, back where they begun, unbanked and with few alternatives to hand. Overwhelmingly, banking is one of the biggest challenges crypto companies face. A lot of people in crypto are completely denied access to banking services, and this can become a huge issue. When the crypto space began to grow in the early 2010s, mainstream banks were often hesitant to work with the sector as they saw it as inherently risky. But as the industry began to move closer to the mainstream over the past few years, Wall Street's level of comfort grew. Big banks such as JP Morgan and BAY Mellon started banking crypto exchanges and letting their clients store and trade coins. Regulators kept an eye over the sector, but did very little. Then in 2020, crypto collapsed in spectacular fashion. In May, the failure of Terra Luna stablecoin wiped out an estimated $60 billion, promoting a chain reaction that later took down crypto lender Celsius and hedge fund Three-Way Arrow Capital. This was followed in November by the implosion of crypto exchange FTX, whose founder has since been charged with 12 criminal offences, including banking fraud, wire fraud, and money laundering. In regards to the banks, some are comparing it to the Obama administration, under which officials were said to have pressured banks into severing ties with disfavourable industries like pornography and payday lending. Some analysts are stating these moves are an attempt to regulate by stealth, to use influence over the banking sector to create a de facto policy without requiring the approval of Congress. For now, most banks are petrified of serving crypto, so the policy has been a success without requiring a ban. Banks have re-evaluated their decision to provide banking services to the crypto sector. Many banks have stepped back their crypto activity, and a lot of crypto companies, ranging from small to very large, are looking for bank accounts. Some economists are highlighting that they don't think there's been a coordinated attack on crypto, but that the failure of Silvergate and Signature is a reflection of fragilities in the operating model. Adding talks of underhanded tactics among regulators is purely speculation. But whether it's by accident or design, crypto is facing a banking crisis in the US. The closure of Silvergate and Signature sent crypto businesses hunting urgently for new banking partners. By virtue of the value they represent to banks, larger crypto businesses are likely to be able to hold on to their existing US accounts, which will mean that US residents will still have access to crypto exchanges. However, we expect the smaller firms to really struggle. The result is likely to be that some businesses will migrate to countries with more favourable regulations. With the fall of Silvergate and Signature, the only two banks to offer real-time payments at any hour on any day, the 24/7 crypto industry will have to get used to operating at a different pace. So do you think crypto is facing a banking crisis? Let us know in the comments below.